Wondering what's in store for the 2022 housing market? Well, I'm going to break it down for you. Hi, I'm Nick with the Iannitti Group. I just want to take a quick minute to wish you and your family a very happy and prosperous new year. Also have a real big announcement over here for the Iannitti Group. We've actually expanded into Sarasota, Florida. So now we can offer you even more value on both coasts. So back to the market. Let's hop back in and see what we got going on. So things have still remained crazy. Funny, Bill McBride here with Calculated Risk said, it is possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to recent pickup in inflation. But I believe one thing is certain: inventory will tell the tale. You guys know I've been saying this until I was blue in the face, right? Bad news, listings are still at record lows. When we look at this, I thought this graphic was incredibly telling. This is December 2021 year over year compared to December. If you look at this map nationwide, every single state with the exception of Idaho has negative listings, right? Listings are down 27.8% in California, down 48% in Florida, down 49% in Hawaii. Things have not increased, and that's basically due to our inventory levels. When we look at months of inventory, you know, I'm always talking about this, right? 6 months of inventory is a healthy market, 7 months is a buyer's market, 4 months is a seller's market. All of 2021, we operated about 2.5 months worth of inventory. Realize this has never happened in the history of the United States. From 2010 to 2019, we only built half of the homes we normally do in a decade for the previous 6 decades. We are still feeling the ramifications of that, and we're going to continue to do so for the next couple of years. The other thing, though, is when we talk about buyer activity, we have not seen buyer activity slow any way, shape, or form. Actually, things are actually kind of accelerating. When we look at the latest showing time data from November, right, look at these showings compared to 2020. Look at all of the showings from 2021. But again, I think what's even more telling is look at the showings from 2020 and 2021. They crush 2017, 18, and 19, right? Basically the last 3 normal years we ever had. Very telling in the fact that the pandemic has done a lot to kind of redefine housing for people. Now it's their home, it's their office, it's their gym, it's their classroom, it's all these other things. Michael Lean at Showing Time said showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains strong. The fact that every region showed year-over-year increase indicates that buyers are undeterred. It speaks to their desire to keep searching for the next home. We're also seeing it in pending sales, right? So again, still sales, even towards the end of the year, still higher than previous pandemic numbers. That's huge. So what's the opportunity for you? Well, really, it's the amount of home equity you're sitting on right now, okay? Basically, CoreLogic Q3 U.S. Home equity gain for homeowners with a mortgage averaged $57,000 last year, okay? Realize that's nationwide. That's a 31% year-over-year increase and constitutes $3.2 trillion. And they say that this past summer, home price growth reached the highest level in more than 45 years, pushing equity gains to another record high. It looks like this nationwide, right? $64,000 in Florida, $119,000 in California, $92,000 in Arizona, Utah, Washington, pretty much the same, $113,000 in Hawaii. So the name of the game right now basically is you need to know if you have a mortgage, what your payoff is, and you need to know what your home is worth so you can understand how much equity you're currently sitting on. If you don't know how much your home is worth, you need to call me today and I'll help you figure that out, okay? But it's time to look at what can you do with this equity? How can you put that to work? If you need to right size your home, right, whether it's downsize or go up in size, that home equity can be a huge proponent to help you actually get there. Also, maybe it's time you've been thinking about adding an income property to your portfolio. Maybe it's time to take that equity out of your current home and use it as a force multiplier to add an additional income property to your portfolio. If you need help doing that, let me know. I'm more than happy to answer any questions. So Frank Martel, CoreLogic, basically said not only have equity gains help homeowners more seamlessly transition out of forbearance and avoid a distressed sale, but they've also enabled many to continue building their wealth. Okay, Odessa Kushi at First American said, U.S. households own $36.8 trillion in owner-occupied real estate, $11.5 trillion in debt, and the remaining $25 trillion in equity. In inflated adjusted terms, homeowners had an average of $294,000 in equity in Q3 in 2021. That is a historic high. That's huge. So you definitely want to think about how you can actually be using that to your advantage. So what to expect in the 2022 housing market? Well, first and foremost, we already know that rates are going to be going up, right? If you haven't been paying attention, rates are already starting to creep up over the past 2 months. And what we're probably looking at is, we're going to end the year somewhere around this 3.5% mark. Okay. Keep in mind, 3.5% still historically low mortgage rates. Anything from 3 to 4% when you consider inflation and when you consider the tax write-off, it's pretty much a push. It's practically free money. When you consider where our inflation is at right now, which is just out of control, anything really at a 5 or 6% rate would still be really pretty good. So even if you have to pay a little bit of a higher rate than this, a little bit over 4%, if you're buying an income property, realize you're still going to be in pretty good shape from a historic standpoint. You absolutely want to try and capitalize on these rates while they're low, right? Other thing, forbearance, I talk about this every single month. For the first time since the beginning of the pandemic, forbearances have dropped below 1 million, which is great news. What I want you to realize, though, down here in December, consider that this 890,000 people that are still in forbearance, when you consider all the people that have a mortgage, these people in forbearance constitute less than 2% of all people with a mortgage. Okay, so I've been saying this for months, all last year. If you're waiting for this big, foreclosure crisis, some big fire sale for you to come and get a good deal, it's not going to happen. Okay. McClure Bolton Smith from CoreLogic said we may see a little bit of an uptick in foreclosure rates in 2022, just an uptick though, right? From an extraordinary low level, we're not expecting to see a big increase. We expect delinquency rates overall on home mortgages to actually continue to remain quite low. I've told you this in the past. When you look at our foreclosure rate right now, we are drastically below historic norms. Even if foreclosures doubled overnight, which they're not likely to do, we would still be back to our historic average. So again, if you're waiting for the foreclosure fire sale, not going to happen. I thought this graphic was really pretty interesting, right? Has home price acceleration peaked? Question mark, right? First of all, a couple of things I want you to realize. This is year-over-year numbers, and when we come back to January of 2021, realize we're already starting at 10%. We're already starting at a 10% increase, which is huge, right? So up here, we're up to, around the 18%. So have prices peaked? I don't know if we've seen a peak, but it definitely looks like things have started to plateau, right? But what that's really going to start to come into play is where prices are going to go for 2022. When you look at the average of all the forecasts, it's right around 5%. However, what I think is really telling is, Fannie and Freddie and a couple of these others have already started to adjust these numbers upwards. I think it's probably more likely, to see somewhere around that 8 to 10%. We're probably not going to go from 18% appreciation all the way down to 5% appreciation in a single year. There's going to be some middle ground there. Okay. So overall, this is Claire Bolton Smith again, CoreLogic. Overall, I do think 2022 will be another strong year for housing, albeit a little bit higher mortgage rates. And we do think home sales will continue to rise and actually reach a 16-year high in 2022. And I absolutely agree with that. So if you have questions about anything in this video, if you have questions about what's going on in your local market, what your home is worth, please reach out. I'm more than happy to have that conversation for you. I'm also going to do a subsequent local market snapshot. So keep an eye out for that. I'll tell you exactly what's going on in your area. And that's it. Thanks so much for tuning in. Remember, who you choose to negotiate for you absolutely matters.